A business plan is a series of documents, segments of information, and an outline of a plan of action put down on paper so that a new business entrepreneur can follow. There are many plan templates available in books, on the internet, from various government and small business entities, and each one has a very good outline that one can use. The business entrepreneur should be willing to explore several different templates before beginning the building of a business plan. In this segment, we look at one of the most important aspects of a business plan, and that is money and how we develop strategies in using it. Budgets, controllable and fixed expenses, as well as the cost of goods, help to determine the level of financial success in the business venture. This puts concrete into the business plan and demonstrates the need for sales goals as well as an outline of the overall costs during the business venture. There are many reasons why people venture into business. Many have entered and have succeeded quite well. Others have started on financial shaky grounds and then did well. And even others have tried a small business but were unsuccessful. Although there are many ways to determine success, a positive financial base keeps the small business financially stable and in operation. Most small business owners keep a watchful eye on the financial aspects and ensure they are meeting all costs of the business. Money can be likened to energy. The more money in the business has, the more the business owner can use to grow his or her business. Money or energy determines the level of the security the business has in meeting its goals. The first important factor in beginning a business is to be fully aware that the business generates initial expenses. When one opens up a business, all different kinds of expenses occur, ranging from equipment, taxes, permits, office equipment, salaries, initial inventory, business tools, etc. Likewise, each kind of business, whether it is a retail store or a service or a manufacturing company, generates additional expenses that must be paid even before operations of the business have begun. Once a business has officially started, there are going to be ongoing expenses that occur monthly, before, during, and after the selling of product and services. These expenses can be in the forms of controllable and fixed expenses, as well as cost of goods. Let's look at all three of the groups of expenses. Let's start with controllable expenses. Controllable expenses are those expenses that occur periodically but can be managed. Business owners can keep these as low as possible and hopefully without detracting from the overall mission, vision, and image of the business. Some of these expenses can include salaries, which directly affect payroll taxes. Expenses can also include utilities, or the use of business tools such as telephones, faxes, internet, website, fees, etc. Other controllable expenses can be office supplies, professional fees, transportation costs, and marketing and advertisement expenses. There are many controllable expenses that could also apply. And note that the more the business owner recognizes all costs, the more accurate the financial projections of the business plan will be. Fixed expenses are costs that are present each month regardless of any sales activities. These include leases, rents, loan payments, insurance, and other costs that cannot be managed or reduced. Likewise are cost of goods. These expenses include what the product costs are for the business owner to acquire. Also included are costs associated with the purchase of the item, which might include shipping or handling expenses, as well as the labor needed to make the product or service ready for sale. Let's look at a hot dog business. The cost of goods would include all the ingredients needed for the sale, such as hot dogs, buns, condiments, plates, chili sauce, cheese, and other side foods, as well as drinks. Many times a business owner can establish a percentage of the sales on each item, which represents the cost of goods. Now that we have looked at the different expenses, we can add them up and determine the overall cost per month in running a business. From there, we can determine how many sales we must have each month to cover our costs. We are, in effect, establishing an overall budget of what each of our costs will be, the number of sales we must make, and the amount of money that must be transacted per month. Some points to remember. Number 1, accounts receivables should never be counted as sales until the money is received. Number 2, a business owner must budget each and every expense that they could incur in each month. It doesn't mean that the owner should spend that amount of money, but rather ensure that the money is available if needed. It is also recommended to budget additional other expenses to ensure unexpected costs are covered. Number 3, a business owner should keep track on a weekly basis what expenses have occurred. Oftentimes, business owners who take the time to review and see the expenses on a continual basis allows the business owner to make necessary adjustments as needed. Number 4, a business owner, of course, will most likely use a bookkeeping or other professional services to ensure the accuracy of the business expenses and sales. However, the business owner should also keep a watchful eye on the cash flow. Otherwise, the owner may become blind to potential financial problems. Number 5, make sure to budget a salary to the owner. Oftentimes, new business owners assume there will be a lot of money left over at the end of the month. However, if sales are lower than anticipated in a given month, the owner's personal expense would be paid in lieu of something else, which could cause unpaid bills to occur. And finally, understanding the ongoing financial picture of a business does not require special accounting and training. It requires common sense in using money. Because a business has a bookkeeping service does not mean that that business will be run profitably. Professional accounting services assist the business owner when there is an excess of money left over. This concludes segment 6. In the next segment, we will discuss sales prices, net profit, and break-even analysis.